Now let's look into incentive stock option exercise and sale. Incentive stock options have a built-in tax advantage where if you meet two conditions when you exercise and sell the stock, the whole gain that you make from the exercise and sale is considered capital gains instead of income, and hence you pay a lower capital gains tax instead of the higher income tax. Now, what are those two conditions? The two conditions are first, that you sell the stock 2 years after grant date, and second, you sell the stock 1 year after exercise date. So 2 years after grant date and 1 year after exercise date. And both of these conditions have to be met in order to achieve that tax advantage. And the tax advantage is called a qualifying disposition, meaning that if you meet these two conditions, then your stock option is considered to qualify for the disposition that gives you the tax advantage. Now let's illustrate this with an example. In the same example as we discussed before, let's say that your strike price is $1 and you exercise the option on the date that the fair market value is $6. Now you have a gain of $5 that is considered capital gain, and you do not have to pay any taxes on it at exercise. Also, no taxes are withheld by your company at exercise because this is an incentive stock option. Now, when you sell the option a year later, meaning that you beat both of those conditions, when you sell the option a year later, let's say you sell it at a price of $10, that gain again of $10 minus the fair market value on the exercise date of $6, the difference of $4 is also considered capital gain. And so as a result of that, you pay capital gains on the full $9, the $4 from the sale, and the $5 from the exercise as capital gain taxes, long-term capital gain taxes, and no income taxes at all. Again, there is no taxes withheld when it comes to incentive stock options by your company, so it's really important that you have enough cash on hand to pay taxes next April 15. And if you need to make any estimated payments, you also have to make that this year.